Assalamu alaikum. Uh, Hello, everybody. This is Zeeshan Hasan, a tutor for Audit Assurance AA, previously APA exam paper of ACCA. And on the screen, as you can see, that in this video, we'll be practicing objective task questions, that is, Section 8 questions from the um, you know, ACCA Study Hub. Okay, so we'll be doing maximum questions as much as we can, and but I make sure that it's from the full course also, right? Um, without wasting time, I think we should start with it. And here it is, our first, question of uh, OT response question. And here is the scenario first. You are a manager in the advisory and non-audit service department of NetS company. Your clients range from sole traders, partnerships, and small private companies that do not require a statutory audit to companies requiring non-audit assurance services. So one of your clients, Frederick, has a retail shop which he manages with his two sons. He is considering incorporating the business. He and his wife will own the shares in the company, and his sons will be appointed directors and take over the management of daily operations. He has asked you about the purpose of external audit and the concept of agency. Okay, the chairman of the board of directors of Lucky has identified need to establish the integrity of management information that the board is receiving from divisional managers. He has asked you about the elements of assurance engagement and the difference between the levels of assurance that NEDAS and Co can provide. An assistant who has been assigned to help you has expressed some uncertainty over the evaluation criteria in assurance engagements. You have given her the following as example of evaluation of criteria: OECD principles, money laundering regulations, IFRS accounting standards, commonly used definitions of key performance indicators. Right. So let's start with it. And firstly, what is the first question? In line with international standards on auditing ISS, which two of the following are the overall objectives of conducting an audit of financial statements? Okay. Uh, Overall objectives of conducting to obtain reasonable assurance about the financial statement as a whole are free from material misstatement in order to express an opinion on them. Right. Well, for me, the answer is A. A is the answer, right, to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatements in order to express an, uh, an opinion on them. Okay, is the correct answer, because these two, as per the ISA 200, overall objectives of the independent auditor and the conduct of an audit in accordance with ISA. The other two options are more specific objectives of ISA 240 and 570, right? So the more appropriate option is the option A. So we are done with it. Let's do the next question. Which of the following statements describe the concept of agency? So for me, the directors will be responsible for explaining their actions to shareholders. No, wrong answer. Directors will be responsible for managing the shareholders' property. No, wrong answer. The right answer is the shareholders interest the directors to manage them running of the business. Agency is where an agent agent acts on behalf of a principal to perform tasks for them in the context of a company, it is the shareholders' principals who entrust the directors' agents to manage the business. The directors explaining their actions to the shareholders describes accountability and reporting on the financial statements and communicating as required by the ISS. Okay, describe stewardship, the shareholders may seek to ensure alignment to their objectives by monitoring profits, but cannot ensure this due to the agency problem. That is the inevitable conflict that arises from the separation of management and ownership. Okay, next question. The chairman of the board of Lucky Company asks about the elements of assurance engagement. Which four of the following are included in the elements of assurance engagement and underlying subject matter? Okay. Uh, uh, Assurance report, communicating commitment to D for me. Okay, yeah, D. Criteria is there, evidence is there, and so for me, underlying subject matter is the right answer. Assurance report is also correct. Um, Criteria is also correct. And evidence. So these are the components A, B, D, and F. There are five elements of an assurance engagement according to ISAE 3000 assurance engagement other than audits or reviews of historical financial information. The four above and a three-party relationship, which is not listed in this, you know, criteria provided options. So commitment to competence is an element of the control environment uh, and ethical requirements are the elements of a system of quality management. So so I hope it is clear till here. Now, next question. Your assistant has expressed uncertainty about the evaluation criteria used in assurance engagement. Match each of the following evaluation criteria to the related subject matter. Okay. For OECD principles, that's the governance arrangement. Okay. For money laundering regulation, it's anti-corruption procedures. For IFRSs, it's financial statement related and commonly used definition of key performance indicator is achievement of operational targets. Okay. So, yeah, OECD principles, that's governance arrangement. Remember that. Uh, we need a pen. Yeah. For money laundering, uh, it's anti-corruption procedures. For IFRS accounting standard, it's related to the financial statements, and then commonly used definitions of KPIs is achievement of operational goals. Well. Yeah. Next, which two of the following system statements comparing a reasonable assurance engagement with a limited assurance engagement are true? Uh, Engagement risk is a greater for a reasonable assurance. Less evidence will be sought for a which of the following is comparing a reasonable assurance with a limited. Engagement risk greater for a reasonable assurance engagement. Less evidence will be sought for a limited assurance. Yes, both reasonable and limited assurance engagement requirement understanding including control environment. Okay. No. So one of the correct option is B, and the next correct option is D. That is, the conclusion is expressed in a positive form for a reasonable assurance engagement and a negative form for a limited assurance engagement. Right? You know, the in a reasonable assurance engagement risk is reduced to an acceptably low level as the basis for the practitioner conclusion. This requires an understanding of the entity and its environment that is sufficient to identify and assess the risk of material misstatement. The conclusion conveys the practitioner's opinion on the outcome of the measurement or evaluation of the underlying subject matter. A limited assurance engagement has greater risk than a reasonable assurance engagement, as procedures are limited compared with what is necessary to provide reasonable assurance. Underlying the subject matter to provide the lower level of assurance does not require full understanding of the entity and its environment. The conclusion is expressed in a form that conveys that based on the procedures performed, nothing has come to the practitioner attention to cause the practitioner to believe the subject matter information is materially misstated, that is negative form. So, so far, so good. And we are done with this part. Okay. This question. Then we have the next question, that is Geopard company. Okay. So next, our question is Geopard company, and what it's saying, you are an audit manager of Geopard and Co, and you have just been assigned to the firm's technical and training development. Your responsibilities include development and delivering in-house training, house courses to staff, monitoring the content of the external training courses with the firm staff attend. A partner in the audit department asks you to develop a course for a new recruits with accounting background, but who, according to the partner, seem to have no idea what an external audit is or how it is regulated. He has asked the course includes the auditor's right to fulfill his duty to meet the overall objectives of an audit concluded in accordance with the international standard on auditing. Also, as some of the new recruits are currently being registered with ACCA, you will need to explain the fundamental principles set out in the ACCA Code of Ethics and Conduct. After the course, you received answers to homework tasks. A student made the following notes to describe the inherent limitations of an audit. Information is largely historical, therefore, it does not reflect the future events or transactions. Most evidence is pervasive rather than conclusive. A substantial degree of classification and aggregation in the financial statement means that detailed information is lost. The audit does not consider other information contained in the financial statement, such as director's report. So, which of the following sources should be included in the course on external audit regulation? Okay. Uh, ACCA Code of Ethics, AC's companies legislation, IFRS accounting standards, international standards on auditing. Well. So the correct answer is one, two, and four. Financial reporting standards specify the rules which should be applied in the preparation of financial statements, management responsibility, and so would not be included in the course on external audit regulation. It is companies legislation that prescribes the requirement for a statutory external auditor. Okay. Um, Next, the new recruits need to know the rights of auditor to fulfill their responsibilities for an audit conducted in accordance with international standards on auditing. Which three of the following are the rights of auditors to fulfill their responsibilities? Okay. Well, to access all accounting books records at all times. Okay. to insist that financial statements are correct if they are not presented fairly in all material respects. Okay. To receive notice of journal meetings. Okay. So to access all accounting books and records at all times. Okay. To insist that financial statements are corrected if they're not prepared fairly and no. To receive notice of all journal meetings, to attend and be here at the board meetings on the matters of concern to auditor now, to receive all information and explanation from management necessary for the proper conduct of the audit. So A, B, and E. These three are the right answers, right? And auditor cannot insist on amendment. If management does not agree to amendment, the auditor considers necessary. The auditor will modify the opinion of the auditor's report. The auditor does not have a right to attend internal management meetings, such as board meetings, only meetings of the company in general meeting. Okay. Now, next question. Which of the following statements regarding the applications of ACC Code of Ethics and Conduct to students is true and fair are, sorry, true? Registered students are bound by the code as affirmed by their signature on their enrollment application forms. Registered students who fail to comply with the code will be liable to disciplinary action. Uh, so both one and two, B is the right answer. Okay. B is the right answer. Registered students are both bound by the ACCA Code of Ethics and Conduct and liable to disciplinary action if they fail to comply with it. Now, next question. Which of the statements correctly describes inherent limitations in an audit? The statement which is given here upstairs, right? 1, 2, and 3, and 4. And for me, the answer is 1, 2, and 3. 1, 2, and 3. Uh, Inherent limitations of an audit arise from the nature of financial reporting, one, and three, the nature of the audit procedures, two, and the need for the audit to be conducted with a reasonable period of time and a responsible, reasonable cost. Four is not a true statement as the auditor has responsibilities relating to other information. Okay. Now, you are reviewing matters for a course that have been prepared and will be delivered by an external training provider. A section of the content concerns the relationship between international standard on auditing and national standards. Identify by clicking on the relevant box in the table below which whether each of the following statements is either true or false. Okay. So, well, IFAC members body may adopt ISAs or use them as a uh, basis for national standards. That's true. Okay. Countries that adopt ISAs cannot modify them. That's false. Okay. ISAs override national standards and regulations for external audit. That's also false. Compliance with ISAs ensures compliance with national standards. That's also false. Okay. ISAs may be modified to meeting national requirements. IAA as the pronouncement, including ISAs, do not provide override local laws or regulations, government external audits in the countries that require national standards to be followed. If local laws or regulation differ from or conflict with ISAs on a particular subject, an engagement conducted in accordance with ISAs will not automatically comply with national standards. The standards of a national accounting body, for example, may impose additional requirement. So far, so good, and we are done till here. And now we will move to our next question. That is Serena Company. Serena Company is a company listed on a stock exchange. It provides a specialist training in accounting and finance. You are an audit manager at Posam and Co. and you are considering a number of governance issues which have arisen. The chairman recently received correspondence from a shareholder who is concerned that Serena Company does not comply fully with corporate governance practices. The Serena Company comprises four executives who originally set up the company and two non-executive directors. The board has not established an audit committee and no internal audit function has been set up to monitor the system of internal control. The chief executive officer, Daniel Brown, has recently assumed the role of chairman of the board. The finance director and the chairman decide on the appointment and remuneration of the external auditors. The executive director's remuneration is proposed by the finance director and approved by the chairman. They are paid an annual salary and share options. Since the company listed, the directors has remained unchanged, continuing the practice of automatic annual reappointment. So the board has completed the following response to the correspondence from the shareholder. The composition of our board with four executive directors and two non-executive directors allows for strong governance because the executive directors understand the company decision making and operations. Our CEO Daniel Brown is a strong chairman of the board because of the perspective he brings as the day-to-day leader of Serena Company. The inclusion of share options in the director's remuneration package helps to keep them focused on the long-term results of Serena Company. One of the strengths of the board is the many years we continue as directors, which gave us a deep understanding of the company's history. Okay. In a recent board meeting, the chairman suggested that an internal audit department be created. The reports directly to the board. In response, the finance director suggested that Posam and Co. be hired to provide internal audit services as they would relate to a significant part of internal controls over financial reporting. Okay. Which two of the following describes the benefits to Serena Company of forming an audit committee? Okay. So, first one, the audit committee will provide a formal link between the auditor, the non-executive directors, and the shareholder. Well, it is the one. Okay, then audit committee will assume responsibility for making decisions regarding the appointment and remuneration of the external auditors and executive directors. No, the audit committee will assume responsibility for the company's financial statements and budgets. No, the audit committee can monitor and review the company's system of internal control. So D is the also the benefit. So decisions regarding the reappointment and remuneration of executive is a responsibility of a nominations committee. The board is ultimately responsible for the financial statement. Now, next question. Identify by clicking on the relevant box in the table below whether each of the following individuals or groups of individuals should be included on the audit committee of Serena Co. Uh, okay. Well, CEO Daniel Brown need to be excluded. Two non-executive directors included. Finance director need to be excluded, and three of the executive directors need to be excluded as well. Audit committee should be comprised entirely of non-executive directors. Okay. So next question: which of the board's response So, which of the board response to the email from the shareholder reflect a correct understanding of the principle of corporate governance? And the answer is here, three only. Right, three only. The inclusion of share options in the director remuneration package helps to keep them focused on the long-term result of Serena company. Uh, and then we have another question. Which two of the following functions could internal audit perform can be considered independent of management, examination of financial and operational information? Uh, okay. So it's the right one. Then authorization of transaction is excess of limit set by management. No advising management on cost-effective control for system and activities. Well, C is also the right one. So A and C are you know independence of management. Internal audit should not have a operational responsibility, so should not authorize transactions or routinely prepare bank reconciliations, for example. And then we have the last question of the scenario. Which of the following correctly identifies threats to posiums and posts, independence, and proposes an appropriate course of action for the firm if a request to provide internal audit services is accepted? Okay. So self-interested and familiarity must resign as auditor. No. Self-interest and self-review and must resign as auditor. B is the correct answer. We do not need to know. Look at the other options now, right? Providing a non-assurance service generally creates a self-interest threat due to fee income, familiarity, and advocacy threats are also possible. The main threats of providing internal audit service is, however, self-review. It would relate to a significant part of the internal controls over financial reporting and so cannot be provided to a public entity such as Serena Company. Therefore, Posium and Co. would have to resign as auditor. Okay. Well. I hope it is clear till here. And now moving to the next scenario, that is bonsai trading company. So let us start with the bonsai trading and company. Bon, hmm? Just a second. Just a second. Yeah. So the following scenarios related to question 1 to 5. Bonsai Trading Company. Bonsai manufactures electrical equipment as audit supervisor of Poplar and Co. And you are developing the audit programs for the forthcoming interim audit. Bonsai Internal Audit Department has provided you documentation relating to the non-current asset cycle, including the following related controls. All purchase order for capital items are required to authorized by the Capital Expenditure Committee. On receipt, each of asset is registered a unique serial number that is recorded on the asset and in the non-current asset register. When the asset arrives, a good receive note GRN is completed and the GRN classification is reviewed and initially by a responsible official. Periodically, internal audit undertakes a review of the assets in the register and compare them to assets on the site using the serial number to confirm existence of the asset. Shortly after the internal audit, the audit managers inform you that a fraud occurred during the year. Apparently, a payroll clerk set up fictitious employees and the wages were paid into the clerk's own bank account. This clerk has subsequently left Bonai, but the audit manager is concerned that additional fraud has taken place in the wages department. So, in relation to the controls, identified which two of the following are tests of controls that should be performed during the interim audit. Okay. Well, review a sample of capital expenditure purchase orders for evidence of authorized by capital expenditure committee. Yes. Uh, from a list of serial numbers extracted from the non-current asset register and select a sample of assets purchase and verify their physical existence. No. Select a sample of GRNs and confirm whether each GRNS is initial as required by a responsible official. Yes. So A and C are our answer. These are the tests of control as they concern the operating effectiveness of control, where the purchase orders authorized. Okay, yes or no, were the GRNs reviewed as evidenced by a signature? Yes or no. The other two tests are substantive tests of details. Okay, now next one. As you know, as you develop the audit program for Bonsai, you identify the financial controller, review the bank reconciliation as another control to test in connection with this test. You interview the financial controller to understand the specific data he has reviewed, verify that the bank reconciliation is properly prepared by the accountant and reviewed by the financial controller as evidenced by their respective signatures. Okay, so these actions are example of which of the following types of audit procedure. Um, Action one, inquiry. Action two, inspection. A is our right answer. Okay. Interviewing the controller is inquiry and verifying the proper preparation of a bank reconciliation by reviewing the signature is inspection. Okay. Now, substantive procedures are most likely to be performed during the interim audit on the account balances that is subject to which of the following? Okay. Uh, Fluctuations based on management's directions, very little movement from year to year. Well, B is the correct answer. Interim substantive procedures, should only be performed when the risk of material misstatement is low, such as when an account is subject to few transactions has little movement from year to year. The other three options all have a high risk of material misstatement, and substantive procedures will therefore be performed on year-end balances. Which two of the following procedures should you undertake because of the increased risk arising from the payroll fraud? Okay. So, review board minutes, evidence of management discussion of the materiality of the payroll fraud, review the supporting documentations to confirm the total of the fraudulent payments and assess the materiality of the misstatement are the right answers. The auditor cannot assist Bonsai in implementing better controls, as this would create a self-interest threat, as the audit firm may be perceived as performing the role of management. Management is responsible for the system of internal control and is not appropriate because the auditor duty of confidentiality normally precludes any reporting to third party. Okay, last question from this scenario is which of the following statements most accurately reflects the likelihood that Popular and Co would be liable for the failure to find the fraud? Okay. Well, it is likely to be liable because the terms of the engagement of an audit accept responsibility to find material statements. No, that's not the right answer. Uh, It is likely to be liable if indications of a possible fraud were found but dismissed as material due to inadequate investigation. So, cool, we are done with this part of the scenario, right? Now, we will move to the next scenario. And next scenario. So let's start with the the Cherry Blossom Company. As you can see, Cherry is manufacturer of custom-made furniture. The company purchased its raw material from a wide range of suppliers. Below is a description of Cherry's purchasing system. When production supervisors requires raw material, they complete a requisition form and submit it to the purchase ordering department. Requisition forms do not require authorization and no reference is made to the current inventory levels of the materials being requested. Staff in the purchase ordering department use the requisition to raise sequentially numbered purchase order based on the approved supplier list, which was last updated 24 months ago. Okay. The purchasing director authorizes the auditors before they are sent to the suppliers. When goods are received, the warehouse department agrees the quantity to the suppliers dispatch note that accompanies the goods and checks the quality of goods received. If satisfactory, a sequentially numbered goods received note is completed and a copy sent to the finance department. Purchase invoices are sent directly to the purchase ledger clerk. At the end of each week, he gives each invoice a unique number based on the supplier code and inputs them to the purchase ledger. Using batch controls, invoices are reviewed and authorized for payment by the finance director. All invoices are paid 60 days after input. Which of the following is not a control deficiency in cherry blossom purchasing system? Okay. Well, production supervisors complete a requisition form submitted to the purchase ordering system. It's the right answer. A is the right answer. It is not a control deficiency for production supervisors to complete requisitions and submit them to the purchasing ordering department. This is generally how purchases are initiated. The other three options are control deficiencies. The warehouse department should check goods received against the original purchase order as well as the supplier's dispatch note before raising a GRN purchase. Invoices should be numbered sequentially, not based on supplier code. Payment should be in accordance with supplier's terms and take account of early settlement discount. Okay, next question. Which of the following controls should be used to address Cherry's deficiencies in internal control in the purchase ordering department? Okay, well, requiring authorization or requisition forms. Uh, the finance director authorizes the orders before they are sent to suppliers. Management sets minimum authorized report level of for inventory. The approved supplier list is updated on the least at an annual basis. So for D, 1, 3, and 4 are the right answers. You know, 2 is not a control that should be used to address the purchase ordering department control deficiencies because the finance director should only be responsible for authorizing payments. Well, Cherry Blossom's control over cash include the financial accounting signature, the monthly bank reconciliation prepared by the cash accountant, The finance director is comparing monthly capital expenditure to budgeted capital expenditure. These are the example of which of the following control activities: verification, reconciliation. No. Approval and verification are the right answers here. Okay. As you know, in one, the financial statements accountant has reviewed the reconciliation and evidence approval that it has been properly prepared. The comparison in two is an example of verification that is comparing two items to address the completeness, accuracy, or validity of processing transaction. In this case, if actual expenditure is less than budget, it may be recorded completely, or if more than budget, may not be valid authorized. Now we have the last two questions remaining with this scenario. An effective system of internal control requires the appropriate segregation of duties, for which three of the following should be, you know, segregated: authorization of transactions, preparation of financial statement, no custody or handling of assets. Oh, sorry. A, not this one. C, and not budgetary control, but recording of transactions. Author of authorization of transaction, custody or handling of assets, and recording of transaction should be separated such that no one person can initiate a transaction, record in the accounting records, and have custody of assets which arise from the transaction. Last question. Now, the finance director has recently discovered that Cherry has been paying suppliers invoices in respect of raw materials which had been returned due to poor quality. Which of the following controls would have prevented this from occurring? Comparison of supplier statements with the payables ledger account, uh, matching of purchase invoices with good received notes. So, C is the right answer. The goods received note GRN is only raised when quality has been checked and confirmed to be satisfactory. So, matching purchase invoices with GRN will identify goods that have been returned, rejected, example, due to poor quality. Since unmatched invoices would not then be proceed, they could not then be paid. Okay. I hope it is clear till here. Let's move on to other area. And our next question is Bush Baby Hotels. So the Bush Baby Hotels Company BBH operates a chain of 18 hotels located across the country. Each hotel has bedrooms, a restaurant, and leisure club facilities. Most visitors to the restaurants and leisure club are hotel guests. However, these facilities are open to the public as well. Hotel guests generally charge and cost to their room. Other visitors must make payments directly to the hotel staff. During the year, senior management noticed an increased number of discrepancies in cash balances and amount of inventory that suggests that some employee have been stealing cash goods from the hotels. Management is keen to prevent this from recurring. Is considering establish an internal audit department to undertake a fraud investigation. The chief executive has suggested that one of the responsibilities of the internal audit department would be to determine relevant benchmarks to compare the performance of a number of departments across a range of relevant indicators as part of the scope of a wide ranging project to improve results. The finance director has suggested that the internal audit department could undertake inventory counts at the restaurants of the 18 hotels. There is likely to be a significant level of inventory held at each hotel. An internal audit could then be compared actual quantities to these hotels record. Management agrees that the internal audit department should have broad a role as possible, as this will make the decision to recruit an internal audit department more cost effective. So, which of the following describe a sorry? So, which of the following describes how a new internal audit department could assist the directors of BBH in preventing and detecting fraud and error? Could assess the main areas of fraud as well as assess the education effect? No. It could evaluate the appropriate of company's objectives and the board strategies to achieve those objectives. No, lie. No. Having developed a system of internal control, it could undertake regular reviews of each hotel's compliance with this. Okay, it's right. The one is also right. Sorry. Yeah. It could assess the main areas of fraud risk as well as assess the adequacy and effectiveness of the system of internal control. And the last one, the where the fraud is suspected, it could undertake an investigation to identify who is involved, the likely amount stolen, and obtain evidence for any policies investigation. So, 1, 3, and 4 are the answer, right? Each of these describe how a new internal audit department could assist BBH director in preventing or detecting fraud or error, who is not correct because it is not the role of internal audit to judge the company's objectives of the board's strategies to achieve these objectives. Also, the appropriateness of such objectives and strategies would not assist in preventing and detecting fraud and error. Okay. Uh, which of the following are the limitations of BBH establishing and maintaining an internal audit department? Okay. That is, the internal auditors will employees may impair their independence as they may not report issues to those charged with governance for fear of losing their job. It's right. As there is no requirement for internal auditors to be qualified and there may be gaps in the experience and technical knowledge of the department, yes. As BBH has not previously had such a department, there may be some resistance to employees having their work reviewed, especially if the department first asks as a fraud investigation. So 1, 2, and 3. B is the right answer for it. You know, uh, each of these describes limitations of BPH establishing and maintaining an internal audit department. 4 is not correct because internal audit department is not required to be independent. Although the internal audit function can be outsourced, it is often in-house and therefore nearly never truly independent. Okay. Next question. Which of the following describes the internal audit assignment to determine benchmarks, regulatory compliance, value for money, operational information systems, or the best value? Well, value for money. Value for money, VFMS, defines that the evaluation of management achievement in terms of economy, less input, more efficiency. For less input, we get more output and effectiveness. That is, our objectives are achieved. VFM is the response, as only of this would deal with relevant benchmarks, indicators, and performance for a company whose primary objective is to make a profit, best value audits to public sector and other entities that have a duty to deliver services. Okay. Then, which of the following conclusion could be drawn by the internal audit department if it undertakes the inventory count? Okay, if actual quantities are generally lower than record quantities, there may be obsolete inventory. If actual quantities for a specific hotel are lower than recorded quantities, this may be indicate fraud. Okay. Sorry. Yeah, if actual quantities are generally, you know, lower than recorded, there may be obsolete inventory. It actual quantities for suspect are lower than recorded. This may indicate fraud. So yeah, this is the right one. If actual quantities are higher than recorded quantities, employee may not have been adequately trained on how to record inventory movements. If there are no different, there are no inventory issues. So A is the right answer. One is not valid because holding obsolete inventory would not necessarily result in any difference and could result in higher physical quantities. For example, obsolete inventory is identified and adjusted on the records, but not physically removed. Four is not valid option because even if there is no difference, there could still be inventory issues such as obsolescence or fraud involving falsification of the records as well as theft of the inventory. Now, the last requirement of this part, which of the following are additional functions that the internal audit department might be required to undertake? Testing controls over cash receipts and cash counts? No. Reviewing the computer environment and controls? Yes. Monitoring compliance with laws and regulations? The three. So two and three are the correct one. These are the additional functions that could be undertaken by the internal audit department. Four is not because the role of the internal audit is to evaluate and improve the effectiveness of risk management control and governance process. Reviews of employees' eligibility for promotion would be undertaken by HR department. Well. We are done till here. Next, we will be moving to our next scenario. Okay. And so the next scenario here, let's start with it. It is 1st July 2005. You are auditing the financial statements of Youth or company for the year ended 30th April 2005. In March 2005, the board decided to close one of the company's factories on 30th April 2005. A full inventory count was carried out at 30th April 2005, and audit test confirmed that the counts were accurate and there were no purchases of sales cut-off errors. In June 2005, you determined that in respect of the factory closure, some of the plant and equipment has been sold, most of the inventory has been sold. All employees have either been made redundant or transferred to another factory. The company has provided you with a schedule of the closure cost, the recoverable amount of the plant and equipment, the net realizable value of inventory, and the redundancy cost. Details of the plant and equipment are maintained in a non-current asset register. So, so well, here it is. Match each of the following audit procedures on plant and equipment to the appropriate assertion. Inspection plant and equipment at factory at the reporting date. Uh, well, for this part, it is existence. Examine purchase invoices for evidence of ownership of material items of plant and equipment. Okay. Then next one is review and repairs and maintenance expenditure account for asset expenditure. That's completeness. For disposals, agree proceeds to sales invoices and cash book receipts. That's accuracy and valuation. Examine purchase invoices for evidence of ownership of material items of plant and equipment. Well, that's right. Okay. I hope it is clear till here. Uh, Need some water. Well, in these summers days, especially, the water is such a blessing. So, which three of the following audit procedures are appropriate to verify management's estimate of the realizable value of the inventory? So, trace a sample of goods received notes and good dispatch notes from the before and after the year and to inventory records. Now, inspect the inventory record for evidence of obsolete for slow moving inventory. Yes. Okay. For inventory that has been sold, agree proceeds to sale invoices and cash book receipts. Yes. Confirm the reasonableness of the basis on which production and overheads are allocated to inventory. Analytical procedures on advertising and delivery cost and other estimated cost of sales. So B, C, and E are the right answer. Sampling goods, receive notes, good dispatch note is a test of cutoff. Audit tests have confirmed that there are no cutoff errors. The allocation of production overhead is relevant to determining cost, not realizable value. Next question. Which of the following audit procedures is not appropriate for testing the estimate of the of the redundancy cost? Well, develop an independent estimate and compare with management estimate. No. Compare management estimate and redundancy payments made in prior periods. Which two of the following audit procedures would help to determine whether management has identified all accounting estimates that could be material to the financial statements? Okay. Well, inquire about the existence of subsequent events. Yes, right. Review communications with lawyers for information about litigation, right? So A and B are the right answers. Events occurring subsequent to year-end may reveal or substantiate amounts that should have been reported as estimated at year-end. Communications with lawyers may also reveal pending or threatened litigation for which estimates were required. A third-party confirmation of inventory quantities does not provide evidence about accounting estimates that should have been, recorded. Whether accounting estimates deviated from historical patterns assist assist in determining whether recorded estimates are reasonable, but does not provide assurance that management has identified all estimates. Now, well. Last question. Which three of the following are the factors that would increase the degree of estimation uncertainty associated with an accounting estimate? Existence of recognized measurement techniques, liar, unobservable points. Yes. A short forecast period. No. The auditor's professional judgment. Right answer. Oh, sorry, not right. This, yeah. Sensitivity to changes in assumptions, yes. And the lastly, non-management bias. So PEF are the right answer. Management is responsible for determining the estimations. Therefore, known management bias would increase the degree of uncertainty. Unobservable inputs and sensitivity to changes in assumptions are factors that would increase the lack of precision, recognized measurement techniques, and the short forecast period would decrease the lack of precision that auditor's professional judgment has no bearing on the degree of estimation uncertainty. Okay, so I hope that it is clear till here, right?